Markets trade sideways after Wall Street saw selling pressure overnight. The Nifty falls below the 50-day DMA ahead of the December series expiry. Metals and autos fight for the bulls while realty and healthcare stocks drag.
Silver's furious rally turned around Monday with the precious metal's biggest one-day fall in more than 4 years. Gold and silver futures both slid after exchange operator CME Group increased margin requirements in response to recent volatility. Silver drops 15% from the highs in the biggest one-day decline since February 2021. Gold sold off 5% from highs last night.
The Secretary of the Department of Financial Services tells CNBC TV18 that the insurance regulator IRDAI is set to come out with draft regulations on insurance commissions. The insurance amendment bill, which was passed earlier this month, had an enabling provision for the IRDAI to be able to regulate high insurance commission payouts. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormaz Fatakia. With me as always, Arundhati Raman. And Arundhati, good afternoon.
Good afternoon, Hormaz. Hi guys. It's been, 2 more days left for the new year. It's been quite a range-bound session of trade today. Expiry as well is something we're looking out for.
Yes, the final expiry of 2025 and a lot of important events lined up in the last 2 hours of the trading session, which makes this trading session, although range bound, a very important one as well. So even if you see the range for today as well has been 110 points. That's where the Nifty has been meandering in all through the morning. But the last 2 hours is important because of the fact that the Nifty rebalancing takes place in the last few minutes of the trading session, and particularly so on the Nifty Bank because of the fact that HDFC Bank and ICICI Bank, both the index heavyweights, are going to see outflows, potential outflows, because their weightages will decline in comparison to the other constituents, and there will be 2 new constituents that will be added to the Nifty Bank, and that will be Yes Bank and Union Bank. They will be seeing inflows, but HDFC Bank and ICICI Bank, the 2 index heavyweights, if there is further selling pressure, we may see that having a bearing on the Nifty as well. It is the Nifty Bank that has kept the Nifty losses in check so far, but that might just prove to be the decisive factor in the final few minutes of the trading session.
Absolutely, Hormaz. And some of the other sectors, let's take a look at the ones that are doing really well, right? It's that metal pack that's leading from the front. There's no stopping that rally in Hindustan Copper. It's about 7% higher today. Other stocks like SAIL and NALCO also gaining around 2% in trade today. Auto names are also doing really well. Hero MotoCorp, M&M, Bajaj Auto, all of them gaining in trade over 1% higher. And we'll be watching out for those auto sales numbers for December. On the downside, we've got those realty names which are lagging in trade: Prestige, Brigade, DLF, all of them down over 1%.
A lot of number of stocks are also buzzing in today's session. The broader market names that are doing not so well in today's session. And there are big names as well, mind you, not the low free float ones. Kaplan Point is down 6.5%. That's extended its losses. Coromandel International is down 6%. That has sprung up in the list of losers now on the Nifty 500. So these are some big broader market names that are not doing well. You see the fall there on Coromandel International. That's down to the lowest point. Intellect Design continues to remain lower, 4.5%. Wockhardt is down 4.5%. Happiest Minds is down 4%, SEAT is down 4%. So the advanced decline ratio firmly in favor of the declines, and these are the significant broader market names that are currently at the lowest point of the day, seeing a lot of selling pressure. But what are some of the others that are reacting to news flow in today's session? Upasna is here to tell us just that. Upasna.
Well, first up, let me start with Lupin. The company signed exclusive licensing, supply and distribution agreement for a GLP-1 drug, and the agreement is with the China-based Gan and Lee Pharmaceuticals for bonfaglutide, which is for type 2 diabetes. Next up is RVNL. The company receives order worth 200 crores from East Coast Railway. Next up is Shriram Finance, also in focus, as CARE upgrades the credit rating for NCDs and debt worth 2,500 crore from AA plus stable to AAA stable. Next up is Vari Energies, even that is in focus, as the arm sets up 2 solar inventor manufacturing facility with an annual capacity of nearly 1.5 gigawatt, totaling to about 3.05 gigawatt in Gujarat. And also the company's CEO has resigned with effect from May 15, 2026. IOB also in focus as the bank gets approval from RBI to set up IFSC banking unit in Gift City, Gujarat. Timex Group also in focus today as well, as the Timex Group Luxury Watches, BV, the promoter of the company, has exercised its oversubscription option to sell additional 4.4% stake in the company via OFS. And lastly, we are looking at Eternal as well, as Vipin Kapuria, the CFO, resigned within a year, is what the company has indicated. So all in all, we are watching out for all these stocks in today's trading session.
All right, Upasana, thank you so much for taking us through those details. Now, the commodity market has been seeing some wild swings and volatile moves over the last few days. Manisha Gupta is here with all of those details. Manisha?
Well, it's the last days of 2025, but the volatility in commodities just about continues. If you look at the markets right now, well, we've seen copper gain up by 5%, silver is up 5.5%, nickel is trading 7% on the higher side. That is the kind of moves that many of these metals, precious and base metals, seem to be putting forth. I'll start with copper, which has hit a record high in this year. It's headed for a best yearly gain since 2009, and it is up nearly 42% for the year. And then it is about silver. Has been very volatile, has hit a record high this year, best yearly gain since 1979, and it is up 160% for this year. And we also have seen gold hit record highs 52 times in this year, best annual gain since 1979, and gold is up by 67% in this year. We also have had platinum hit a record high in this year itself, and this is the best yearly gain that we've seen ever in platinum. This metal also is trading 143% on the higher side. And then comes aluminum, which is up by nearly 16%. Zinc is up 5%. Nickel has gained 8% for the year 2025. Palladium has gained up by 86% because of the strong automotive demand that we have seen. You have cobalt, a minor metal, which also has gained 117% because of supply concerns in Congo. And then you have rhodium, which is being used in AI and renewable energy going forward. This metal is also gained up by 95% in this year. So 2025 clearly headed for a strong close when it comes to many of these metals, almost trading at multi-year highs or record highs for some of them.
Multi-year highs, record highs. It's been a year of precious metals, base metals and everything metal that you could come across. Manisha, thank you for bringing that up to speed for us. Let's bring you some market insights now. Earlier today, Taimur Beg of DBS Group came to our studios to share his outlook for the upcoming year. Listen in.
Even if rates are higher, borrowing takes place. I normally think of a situation where sentiment is strong. It doesn't really matter what the interest rates are. Borrowing takes place. If the sentiments are poor, no matter how low the rates are, people don't borrow. We're looking at 26 as a year where sentiment picks up on the borrowing side of the spectrum. Good for financials, good for lenders, but also underpinned by strong borrower confidence.
We also spoke to Nimesh Chandan of Bajaj Finserv AMC, who says it has been a quiet end to an exciting year. He adds that India is on a very positive footing going into 2026.
Looks like a bit of a quiet end to a very exciting year, and I think people can enjoy that too. The sentiment actually is a bit low because of all the events that have happened this year. Otherwise, if you see, when I look at the economic cycle, we are in an upturn. The business cycle or the profit cycle of corporate, we are starting to see upgrades now and a much better outlook for next calendar year. And if you look at the credit cycle, that has also picked up. So asset quality is benign and you are seeing pickup in credit growth. Margins, at least for NBFCs, are doing better. Banks will slowly recover after they price in all these rate cuts. So I'm actually seeing the fundamental cycle, that is the economic cycle, the profit cycle, and the credit cycle doing well. Became bullish on real estate. We became bullish on the rural as well as urban consumption theme, and paint somehow fits very well in there. And we saw initial pickup in volumes also in the last quarter. The competition slowing down its aggression is definitely seen, and last quarter numbers are showing that. So there is no aggressive player who is let's do anything for market share. We are seeing the regular competition, which is a little more measured and little more sensible competition. So we are seeing an upturn in the paint industry where the volumes have now started to pick up and pricing is not that aggressive. Add to that a benefit of the raw material cost.
On that note, it is time for us to head into a short break, but more news and updates on the other side. Stay tuned.
Welcome back. Now, India's factory output jumped to 6.7% in November, hitting the highest level in 2 years. Now, this increase was led by a strong rebound in manufacturing growth and mining. Ritu is joining in with the fine print. Ritu.
Well, yes, sharp acceleration in IIP growth coming in at 6.7% for November, the highest in almost 2 years. The previous high was at about 11.9% in November of 2023. Now, this is a clear rebound after the slowdown that we saw in October when IIP growth had slipped to just about 0.5%. Now, what drove the spike in November is a broad-based improvement we saw that was led by manufacturing and capital goods sectors, as well as some base effect also playing out. The recovery was led by manufacturing, like I said, which quadrupled from October, growing at 8% in November. The key contributors here included the manufacture of basic metals, fabricated metal products, pharmaceuticals and motor vehicles. Together, these segments provided the biggest boost to the overall industrial growth. Mining activity also rebounded in the month, growing about 5.4%. Manufacturing and mining actually more than offset the contraction that we saw in electricity output, which contracted by 1.5% year-on-year, acted as a mild drag on the headline number. Now, in growth terms, capital goods output rose 10.4% year-on-year, infrastructure and construction goods expanded 12.1%, intermediate goods 7.3%, and consumer durables 10.3%. Primary goods also saw a more modest rise of 2%, while consumer non-durables grew by 7.3%. So overall, what we're seeing is a return to normal production levels and a pickup in consumption after the festive period. But going ahead, IIP growth is expected to ease in December as the base effect normalizes and also the benefit from restocking also starts to wane.
All right, Ritu, many thanks for those details. On to an ongoing story which CNBC TV18 has been following. The Secretary of the Department of Financial Services, M. Nagaraju, has told our colleague Sapna Das that IRDAI is set to come out with draft regulations on insurance commissions. Remember, the big surprise in the Insurance Amendment Bill, which was cleared earlier this month, was an enabling provision for IRDAI to be able to regulate commissions. Let's listen in to what the Secretary had to say.
The government is very keen to have to empower IRDA to have the oversight and also the authority to implement on the distribution costs, and also the power to regulate so that nobody is paying too much commissions. Because the complaint has been that some of the insurance companies too high costs, the agent commissions, and consequently the premiums are either premiums goes up or the ICR, increment capital ratio, is very low.
Now, on this very subject, Yash is here to tell us more on this. Now, we've been reporting on this insurance commission story for some time now, and as we just heard, the DFS Secretary is leaving no doubt that the government has got high insurance commissions on its radar. What more are you picking up on this consultation paper that the DFS Secretary referred to, Yash?
Well, Hormaz, that was a very important cue for the entire insurance sector, that a consultation paper of draft regulations expected from the insurance regulator IRDAI on regulating commissions very, very soon. Taking that forward, what we've been given to understand from our sources is that the work at IRDAI's desk, the insurance regulator's desk, on formulating that draft regulation paper on regulating commissions has already begun. IRDAI has been seeking data from insurance companies when it comes to what kind of commissions are these companies individually paying on individual segments. For example, motor, for example, health, individual segments, what is the proportion of commission which these companies have been paying. What we've been given to understand from our sources is that IRDAI is particularly concerned about the high commission payouts, especially in the motor own damage segment as well as the health insurance segment. These two important segments is where a large part of the concern from the regulator lies, and all eyes now would be on that important consultation paper which the Department of Financial Services Secretary also referred to. We've written to the insurance regulator on this particular query. A response from them still remains awaited, but now going forward, all eyes would be on that important consultation paper as the development takes place here.
We'll have to wait and watch for that paper. Thank you for those details, Yash. Meanwhile, India will host the next AI summit in February 2026. The government expects participation from over 100 countries. METI Secretary S. Krishnan has said that top AI executives and industry bigwigs like NVIDIA's Jensen Huang, Bill Gates, Mukesh Ambani and Nandan Nilekani are likely to be in attendance. Speaking to Ashmit earlier, Krishnan also said that he expects consensus building on AI at the summit.
We expect that the summit would be the most widely attended AI summit of the three compared to the three which were held previously. We expect more than 100 countries to participate, more than 100 CEOs, CXOs to participate. We are organizing it in such a way that most of the activity takes place at one location. So many innovators, researchers, students and others from India and from elsewhere in the global south could also benefit from seeing all of this at one location. We expect a lot of knowledge documents to be brought out as part of this output and some kind of consensus to develop around the way forward on AI across different countries in the world.
If you could throw some names, some clarity in terms of some of the big leaders who are likely to participate either at the governmental level or at the corporate level.
I mentioned those names already. We expect the French president to be there. We expect some of the leading company leaders to be there. Bill Gates has confirmed his presence, the CEO of Anthropic, the CEO of Adobe. Many important CEOs are expected to be there. Many others have also given us a tentative confirmation. And after the holiday season, we'd expect that more confirmations will come up.
And are we working towards a consensus? Are you beginning to see that progress from the...
The working groups have been meeting. The 7 working groups have had 2 rounds of meeting thus far. And we are engaged with our interlocutors from various countries. And I think we should have some positive outcomes.
The big AI summit in February of 2026. Take a short break. More news and updates follow on the other side. Stay tuned.
Welcome back. You're still with us on Business Lunch. Russia has accused Ukraine of trying to attack President Vladimir Putin's residence in northern Russia. However, Ukrainian President Volodymyr Zelensky said that the accusation was a lie and added that Moscow was preparing the ground to strike government buildings in Kiev. Take a look at this report.
Russian Foreign Minister Sergei Lavrov said on Monday that Ukraine had tried to attack President Vladimir Putin's residence in northern Russia, an accusation Ukraine said is a lie. Without presenting any evidence, Lavrov said Ukraine attacked the presidential residence in the Novgorod region with 91 long-range drones, which he said were all destroyed by Russian air defenses. Lavrov said no one was injured and there was no damage. He said that targets had already been selected for retaliatory strikes by Russia's armed forces. Ukrainian President Volodymyr Zelensky denied that his country had planned such an attack. Zelensky said that Moscow was preparing the ground to strike government buildings in Kiev and that the claim was an attempt to undermine peace talks. The angry exchanges, including a statement by Russia that it was reviewing its stance in negotiations in response to the attack, dealt a new blow to prospects for peace in Ukraine. Russia's accusation comes a day after U.S. President Donald Trump met Zelensky in Florida.
Well, thank you very much. We had a terrific meeting.
Trump said they were closer to an agreement to end the war, although territorial issues remained.
That's a very tough issue, but one that I think will get resolved. Yep.
Zelensky said on Monday 2 main issues in a 20-point peace proposal remained to be resolved. Control of Ukraine's Zaporizhzhia nuclear power station, which is in Russian hands, and the fate of the Donbas area. Russian forces are battling to take Donbas, a region internationally recognized as Ukraine's sovereign territory. Kyiv wants fighting halted along current front lines.
Now, U.S. President Donald Trump said that the United States could support another major strike on Iran if it resumes rebuilding its ballistic missiles or nuclear weapons program. Trump also has warned Hamas of severe consequences if it does not disarm. Take a look at this report.
President Donald Trump on Monday warned the U.S. could support another major strike on Iran. That is, if Tehran resumes rebuilding its ballistic missile or nuclear weapons programs after a massive strike in June.
I hope they're not trying to build up again, because if they are, we're going to have no choice but very quickly to eradicate that buildup.
Iran said last week that it had conducted missile exercises for the second time this month.
Iran may be behaving badly, It hasn't been confirmed, but if it's confirmed, look, they know the consequences. Consequences will be very powerful.
Trump made a statement after a meeting with Benjamin Netanyahu. The Israeli prime minister said last week that he was not seeking a confrontation with Iran, but was aware of the reported exercises and said he would raise Tehran's activities with Trump. The U.S. president also said he wanted to move to the second phase of the ceasefire deal between Israel and the Palestinian militants Hamas. Trump heaped blame on the group for not disarming more promptly, arguing that Israel had lived up to its side of the deal. He urged Hamas to disarm or face severe consequences.
Well, we talked about Hamas and we talked about disarmament, and they're going to be given a very short period of time to disarm, and we'll see how that works out. Steve Witkoff and Jared Kushner will be in charge of that from our side. But if they don't disarm, as they agreed to do, they agreed to it, and then they'll be held to pay for them.
Israel and Hamas accuse each other of breaching the deal. Hamas, which has refused to disarm, has been reasserting its control as Israeli troops remain entrenched in about half the territory. Israel has indicated that if Hamas is not disarmed peacefully, it will resume military action to make it do so.
In some sad news coming in from Bangladesh, former Prime Minister Khaleda Zia has died at the age of 80 following a prolonged illness. The former PM will be laid to rest on Wednesday. Khaleda led the Bangladesh Nationalist Party to victory in the 1991 elections, making her the first female PM of Bangladesh. She also ruled the country between 2001 and 2006. Born in Jalpaiguri in West Bengal, she entered politics following the assassination of her husband, former President Zia-ur-Rahman, in May 1981. Prime Minister Narendra Modi condoled her death while remembering her contribution towards India-Bangladesh bilateral relations.
And on that somber note, we take your leave on this edition of Business Lunch from Arundhati and me. Thank you for watching. Midcap Radar on the other side.